Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week on this Tuesday. Carol Master along with Tim Stanovic. Coming up, we're going to check in with Dave Wilson.
Song of the day.
And chart of the day. So we'll get to that in just a moment. First up, though, let's get back to your top business stories and a check on the trading day. 29 minutes to go, Charlie.
Indeed, Microsoft, AMD, 29 minutes away. There's just some of the tech names reporting after the closing bell. Microsoft shares up now by 1.7%. As for shares of AMD on the ticker there. And right now we do have AMD shares up by just about 0.8%. Stocks trading higher ahead of those reports from the big tech names. S&P, though, struggling to gain traction. Right now, the S&P holding on to a 3-point gain. Any gain today will be a record. S&P up now by 0.1%. NASDAQ has advanced 13 points, also on track for a record close, up by 0.1. The Dow up 34, up by 0.1%. 10-year yield 1.03%. Gold is down 0.2%, 18.52 the ounce. And West Texas Intermediate crude down 0.4% right now, 52.54 a barrel. Pfizer CEO Albert Bourla says the drug maker will be able to supply the U.S. with 200 million COVID-19 vaccine doses by the end of May, 2 months sooner than previously expected. Pfizer shares up by 0.2%. Among some of the other drug names today, BioNTech down 4.2%, AstraZeneca up 0.9%, Moderna up now by 3.1%. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Television and Radio this morning, he told us states need to know for sure just how much vaccine they're actually getting.
A lot of that has to do with the predictability, because many states, many places don't know when they're going to get more vaccine, so they're very hesitant and cautious. They're not kind of going through this as if this is kind of, if they can expect to get more later. They're just kind of doing what they can do, and then they wait and they schedule more appointments. That pace can't happen. So I think we need to see a lot more predictability and visibility into the supply chain and when it's coming, and that I think will probably give a lot of states a lot more confidence when they set up these appointments.
And Dr. Amish Adalja was interviewed this morning on Bloomberg Television and Radio. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pitney Bowes shares surging to the highest in nearly 3 years after a positive mention by Seeking Alpha. PBI on the ticker up now by 53%. GameStop extending its astronomical surge as day traders continue to pile into the heavily shorted retailer. GameStop up another 94%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Another 94%. Wow. This is Bloomberg.
Okay, you get a little insight into my world, but, you know, Name That Tune has come back on TV.
This is like early 90s, right? This is early 90s. This is like my, I know, this is like my era.
And this was, I think, one of the songs that came out.
Nice.
And they had a clue like, it's at your dinner table. And then they played, I know, exactly. Nice guys.
We don't even get hints like that here from Dave.
Dave Wilson. Good choice. Good choice. Make the connection.
Salt and Pepper might be front of mind, not necessarily because of Name That Tune, but, you know, there was this biopic out on Lifetime now of Salt and Pepper, which our producer Paul Brennan actually saw over the weekend. He enjoyed it. So there you go.
Oh, I did not know that. This is what Paul Brennan's watching on the weekend, huh?
I didn't know you guys conspired when it came to Song of the Day.
We don't. And, you know, he brought it up after I made the choice. So, you know, that's just sort of how things worked out.
Okay, does it connect to your chart?
Well, you could argue that short sellers are getting pushed around. That's for sure.
See what you did there.
Yeah, when you look at yesterday, I mean, some of that's following through today. But to think that it just sort of emerged from nowhere would really be kind of ignoring what's been going on in the market for a while. And you get that, by looking at this Goldman Sachs index that tracks companies in the Russell 3000 index with the highest percentage of their shares sold short. We're talking about short interest relative to the float, to use the terminology. And it's something that, Jonathan Krinsky over at Baycrest Partners highlighted in his latest report, so I kind of took it and ran with it. And when you look at a ratio between this Goldman Sachs gauge and the Russell 3000, on which it's based, one of the broadest gauges of U.S. stocks, you find out the ratio has more than doubled from a low back in April. And the data goes back to 2008, so what we saw last year was the lowest level ever for this ratio. And, so the chart gives you the whole history. And what we've seen, the last couple days has been exceptional. I mean, the ratio was up a total of 8% Friday and Monday, biggest two-day gain in 7.5 years. It's really sort of a continuation of what we've been seeing now for some time. It just becomes readily evident when you see stocks like GameStop taking off. So, if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, so what came first? The surge in shorts and then the strength? Is that what you're saying, or vice versa?
In other words, that the stocks that have been favored by short sellers have been doing relatively well for some time now. So what we saw the last couple of days is really a continuation of what's been going on for, the better part of 9 months. It's not just sort of a one-day or even a two-day phenomenon. I mean, that's what's interesting in all this, that, you've got all these investors betting against companies, and when you see, like the one fund that had to be bailed out yesterday, that's not just one day's trading. That's something that's been accumulating over time.
Dave, I have to correct myself here. Okay. I said that Push It by Salt and Peppa was early 90s. I stand corrected, 1987, according to Charlie Vollmer.
Yeah.
So I apologize to everybody.
It's on Charlie Vollmer's playlist, right?
Yeah. Well, I guess Charlie's not talking to us.
No, I guess not. It's a great song. It's a great band, right? Dave,
Yeah.
Did we lose you?
No, I'm here. I mean, the one thing that's interesting is I haven't seen the movie yet, but, they had issues in the last couple of years with the sort of third member of the duo, in a sense, DJ Spinderella, and she didn't get in the movie at all.
Wow.
And so she's not happy about that. But, hey, it's Salt and Peppa's story. They can tell it however they choose.
That is so true. Major diss, though. Dave, good stuff. Thank you so much. Really appreciate it. Dave Wilson, he's going to be back a little bit later on with his stock of the day. Coming up, we're going to count everybody down to the closing bell.
Yeah, that's right.
Yeah.
And just look, at this point, only 21 minutes left in the trading day.
I know. Feels like a Tuesday. Feels like a day before a Fed meeting, which is tomorrow, by the way. All right, let's get back to World and National News. Back on over to Nancy Lyons. She's in our D.C. studio. Hey, Nance.
Hey, Carol, the second impeachment trial of Donald Trump will move ahead following a vote rejecting claims that the trial is unconstitutional. 45 Republicans, including Senator Mitch McConnell, voted against the trial. Republican Senator Rand Paul of Kentucky had argued that since Trump is a former president, the trial was in violation of the Constitution. The vote was taken after the senators were sworn in as the jury by Senator Patrick Leahy, who is presiding over the proceedings.
Do you solemnly swear that in all things appertaining to the trial of the impeachment of Donald John Trump, former President of the United States, now pending, you will do impartial justice according to the Constitution and laws, so help you God?
Former President Trump is facing one article of impeachment, incitement to insurrection. The trial will begin on February 8th. Well, President Biden is taking steps to advance racial equity, saying we as a country need to change our views.
We can't eliminate it. It's not going to be overnight. We can't eliminate everything, but it's corrosive, it's destructive, and it's costly. It cost every American, not just who felt the sting of racial injustice.
His latest executive actions deal with prison reform, affordable housing, and police reform. A federal judge has barred the U.S. government from enforcing a 100-day deportation moratorium. That's a key immigration priority of President Biden. U.S. District Judge Drew Tipton has issued a temporary restraining order that was sought by Texas. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So, Tim, this story, also among our most read on the Bloomberg today over the past 8 hours, has to do with New York's apartment investors are suddenly waist deep in distress. I guess a bunch of apartment landlords here in New York City getting burned in what we're calling the gentrification crash.
Yeah, look, it makes sense. Tenant protections, pandemic, delivering a blow to building owners. Unpaid rent is mounting, with New York losing jobs amid the pandemic. In December, New York City's apartment investors were behind on $395 million of debt backed by mortgage bonds. That's almost 150 times the level a year earlier. That's according to TREP data on commercial mortgage-backed securities.
Check this out. Add this stat onto it. Tenants in rent-stabilized units owe at least $1 billion in rent, and wealthier ones are fleeing the city, leaving behind vacancies and pushing newly built luxury towers into foreclosure. Listen, This is one of the stories, these real estate stories we've been watching so closely, wondering what's going to be ultimately the fallout as people are leaving cities, as maybe companies downsize. What will be the pandemic's longer lasting impact on both residential and commercial? And when you start to read about this looks pretty grim and pretty dismal.
It does. And look, it comes at a time where investors have spent the last few years gobbling up apartment buildings because crime has gone down, rent has climbed. It seemed like a good
investment. Looking for opportunities, right?
The pandemic changed all that.
Yeah.
I wonder, Carol,
what?
If you are a young person right now and you want to move to New York City, it seems like such a good time to do that, right? Landlords are crunched, so they're offering concessions.
Right.
And you can probably get a pretty good deal, especially in Manhattan.
Yeah, exactly. And I think there's certain segments of the market in particular where there's been some overbuilding. And so, exactly. And this, goes into, the bigger debate that's out there. Do you think big cities are going to go away? Do you think people are going to flee and nobody's going to want to be there? I ultimately think, no, people will come back.
I think so too. And look, people want to get back to the office.
Yeah, and we heard that from a bunch of investment CEOs, Wall Street CEOs over at Davos. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. 13 minutes away from Microsoft and AMD and Starbucks, among many others. Shares of Pitney Bowes surging now by 80%. GameStop up 92% right now. S&P higher, little changed, up by half a point right now, 38.56. Could be a record if we see any close today in the green for the S&P. NASDAQ up 8 now. That is a gain of about 0.1%. Also on track for a record. The Dow up 9, little changed right now. 10-year yield 1.03%. Gold down $3.13 the ounce, lower by 0.2% at 18.52. That's spot gold. West Texas Intermediate crude down 0.5%, 52.50 a barrel. Brent 55.82. So again, stocks trading higher ahead of earnings from some of the biggest tech companies. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
So it's time for the drive to the close. And back with Tim and me is Ryan Dietrich. He's Chief Market Strategist at LPL Financial, $810 billion in assets under management. Ryan is with us on the phone from Charlotte, North Carolina. Ryan, nice to have you here. I'm going to go right to something that Tim and I are a little obsessed with, and so is anybody on the Bloomberg. And it has to do with, Charlie Pellet just talked about Pitney Bowes. The stock is up 81% today. You had, of course, the 400% rally in GameStop. Sarah Ponzak, our Bloomberg cross-asset reporter, talked earlier about Blue Sphere. It's a penny stock, and it's seen a move to the upside of 451%. It feels like there's a lot of day traders, or what we would have called day traders, years ago, playing around on platforms and social media and really getting some momentum going. How do you look at it? Are you looking at this? How do you think about it?
Yeah, Carol, first off, thanks for having me back. But we are looking at it. I think it's impossible not to, right? We took a look at the top 10 shorted stocks as a percent of float that sold short in the Russell 3000. Not surprisingly, some of the names you just mentioned there, and they're up significantly this year. I mean, it's like these Reddit boards and things. It's truly, I hate to say this time is different, but it really seems like they're trying to find the most shorted stocks, and then they're saying, let's all buy it at once, and let's try to go after these hedge fund managers. And it's a really unique situation. I don't want to say it's like 1999, although I'll be honest, I remember in 99, I was in college. I remember skipping theology class, going to the penny board stocks, trying to make a couple $100 too. So I did this one time too. It didn't end so well, but nonetheless, I don't think it's like 99 because, again, we have earnings growth. There is some optimism that's out there, but there's some major differences between now and then. But some pockets of too much optimism make us a little more cautious in the near term. And those examples of these amazing moves is probably one of the best ways to show some of the excitement we're seeing in stocks here.
Well, we think about the stock market as being efficient, right? The efficient markets hypothesis, right?
Right.
That's what we think it is. But when I see moves like this, it makes me ask the question, wait a second, is this a sign of efficiency? I mean, what's the signal that it sends you about the market and the way that things are priced when you see moves like this?
Yeah, Tim, I think the truth is, if anyone's done this long enough, markets aren't always efficient, right? I mean, you like to think they are in longer term, they maybe get there, but in the near term, you can have some incredible moves. And it is just kind of the world we're living in. I mean, you look at today, small caps once again are leading. Small caps have had a huge rally, since really September, and they continue to keep doing pretty well. So it's like sometimes these things go a little bit further than what investors think, but then you take a look at things and you say something like financials, okay? Financials have literally gone nowhere for 13 years. You look at, the financial ETFs and things like that, nowhere for 13 years. So yes, there are pockets of the stock market that have really gone up a lot, but overall, there's always some value in some places that aren't nearly as stretched. And we think, when all is said and done, those might be some of the areas that do the best when this year is all said and done.
Such as what specifically?
Yeah, well, the cyclical value, I'm sure you've had one or two guests mention those words before, and we're in that camp too. Industrials, materials, financials, they haven't done as well. Now, lately, they've kind of...
But if financials haven't gone anywhere in a decade, what makes you think that this is going to be the year that's going to be different?
Right. Well, we think for a couple different reasons. Look at the remember the 2-10 yield curve. No one talks about it anymore. It's been steepening. One of the steepest level it's been in quite a while. The 10-year yield we think can continue higher, maybe up to 175 when all is said and done, Carol. Because you look at copper, some of those industrial metals, those tend to lead yields higher. Higher trending yields tend to help those financials. Now, we're not saying go majorly overweight and put all your eggs in one basket in financials, but we are saying that's a group that really, finally, like you said, can do well potentially here. But at the same time,
no, I didn't say that. I actually questioned if you're saying that after
Right.
a decade that financials have gone nowhere, what makes you really think that this is going to be a different year?
Yeah, well, no, you're right. And again, I think it's just the yield's finally going to start going higher. Yeah, I think we potentially finally could start to see inflation. I get it. For 10 years, people have probably come on with you guys and said we're going to see inflation. But when you look at some of those manufacturing data points that we've seen the last couple of weeks, like every single 34 out of 34 commodity inputs have seen higher month-over-month price increases. We're not saying massive inflation, but inflation is starting to creep in, and that can lead to higher rates, and that potentially can help financials for the first time, like we said, and honestly about 10 years, maybe to continue to outperform when all is said and done.
Okay, I know you're also liking tech, specifically semiconductors. What's appealing to you about that?
Yeah, I mean, they're the ones that brought us to the party, right? I mean, you look at what happened here, and like Netflix last week. I know Netflix is not a semiconductor, but I want to say, people realize, oh my goodness, there's a lot of earnings growth still coming here, and we think, technology and communication services, which communication services having a really good day today, by the way. Those are some of the areas that have had the most earnings growth and continue to. So we're kind of taking a barbelled approach. On one side, your growth, your technology and communications, and the other side, the cyclical value names we just talked about. I came on with you guys all last year. We said we like growth over value. We've really drastically evened that up here at LPO Research, and we don't think you have to pick a favorite, so to speak. We're saying, both of those areas can probably do pretty well and pass the baton back and forth versus last year when it was pretty clear to us growth would do really well relative to value. We've kind of changed our tune a little bit there.
All right. Interesting. Big tech coming out. What are you watching in terms of the earnings? And I know you're a technical guy, but I do wonder, what about the technicals on, as you said, tech, barbell, that's some of what you like. Are there any names within that big tech world that you think in particular are of interest?
Well, unfortunately, I'm not allowed to talk about individual equities. What I can say is this. You look at this earnings season, almost 85% of companies have beat. It's unbelievable how strong. And I know the bar is low. That's the game that Wall Street plays. But still, this is incredible earnings growth. And those small caps I just mentioned, small caps earnings are incredible. We're looking at this year maybe up over 30% higher the overall earnings in small caps relative to where they were in 2019. That is amazing. And it's another reason that shows just how quickly our our domestic economy is coming back online, as small caps tend to be more domestic by nature.
Yeah, but I will say that we have the Year Ahead event going on at Bloomberg, and I talked to the Carnival CEO. We're talking to all kinds of CEOs to get a feel of what's going on, and it's really a second half story that maybe we start to feel like things get back to normal. So we will certainly keep an eye on it. Ryan, thank you so much. Ryan Dietrich, Chief Market Strategist at LPL Financial, on the phone from Charlotte, North Carolina. I do feel like if there's any improvement, it's much more a second half story.
Yeah, I mean, if you think about even back to what the president said yesterday when he was asked about when all Americans could get a vaccine, he said spring. Okay, so if you think about that, if every American who wants a vaccine can get one in the spring, then what does that look like for consumption and then also expenditures in the second half of the year?
Right, and I do think people are going to be cautious as they start to kind of move out back into the world, whether it's in restaurants, whether it's going to, going on an airplane. I don't think it's going to, like a light switch is going to turn.
They're not going to have their bags packed at that second vaccine dose, ready to go to the airport after getting the vaccine, right?
Exactly. I think it's going to take some time. That's certainly what we keep hearing. All right, folks, we're just about 3-4 minutes away from that closing bell. We're going to count you down to the closing bell and then walk you through some of the earnings that we get after the closing bell. Among them, speaking of big tech, we've got Microsoft. We'll get their numbers. We're also going to hear from AMD, Starbucks, and Texas Instruments. So we'll break down all those numbers, see what kind of trade we get in the after hours.
It's going to be good. Kind of kicking off a big earnings week, too.
Yeah, huge. No doubt about it. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. Stick around. We've got the closing bell in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day fade, folks from Beyond Investing, ringing that closing bell as we await the latest numbers out of Microsoft, Texas Instruments, AMD, and Starbucks. A sudden move lower into the close. Stocks retreating from records ahead of earnings reports from the biggest tech companies. S&P 500 struggled to gain traction throughout the session, weighed down by worries over new coronavirus variants and hurdles to a fresh aid package. S&P lower at the close, down 5, a drop of 0.1%. The Dow dropped 22, lower by 0.1%. Again, NASDAQ pulling back from a record, down 9, a drop of 0.1%. 10-year yield 1.03%. Gold fell 0.2%, down 4.50 the ounce to 18.51. And West Texas Intermediate crude down 0.5%, 52.50 for a barrel of WTI. Pitney Bowes shares climbed by as much as 58%. In fact, at the close, they were up 81% today, the highest in about 3 years after a positive mention by Seeking Alpha. Another big mover today, GameStop extending its astronomical surge as day traders continue to pile into the heavily shorted retailer. GameStop up today by 92.71%. So what might those high flyers tell us about sentiment? Ryan Dietrich is senior market strategist at LPL Financial. He was our guest moments ago right here on Bloomberg Business Week.
Yeah, I don't want to say it's like 1999, although I'll be honest, I remember in 99 I was in college. I remember skipping theology class, going to the penny board stocks, trying to make a couple $100 too. So I did this one time too. It didn't end so well, but nonetheless, I don't think it's like 99 because, again, we have earnings growth. There is some optimism.
Yes, he did skip theology class. Beyond Meat shares soared after the maker of alternative meat, whose growth model has long relied on high-profile partnerships, said it would team up with one of the biggest collaborators yet, and that is PepsiCo. Shares of Beyond Meat up 17.7%, PepsiCo up 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
Yes, indeed, everyone. Time to dig a little bit into the trade. And the trade is going to be largely tomorrow affected by some of the earnings that we're getting after the closing bell. So let's go through it because we have Microsoft out here after the closing bell. Second quarter EPS 203. That is 39 cents better than what Wall Street was forecasting. Second quarter revenue 43.1 billion. That's a beat as well. Tim, the estimate out on the street was 40.20 billion. Productivity revenue also a beat, 13.35 billion versus the estimate of 12.94 billion. Personal computing revenue, that's a beat. Intelligent cloud, that's always an important one. That's where everyone is continuing to grow their businesses as demand for the cloud continues to grow. That too was a beat. And a quick check on the stock in the after hours.
Yeah, well, investors are liking it. It's higher by more than 3.3%, ticking up higher after investors are continuing to digest these earnings. Microsoft's second quarter revenue.
That's a big beat.
Wow, $43 billion versus estimates of $40.2 billion.
Yeah, that is definitely a big beat. TI, Texas Instrument, also out with their earnings. So let me just pull up the numbers here. And they're giving us some outlook too. They're expecting for the first quarter revenue of 3.79 to 4.11 billion. That is above the forecast of 3.58 billion that's out there. They're also talking about first quarter EPS of $1.44 to $1.66, again above estimates of $1.33. And just a quick check on what that stock is doing in the after hours, and that stock is up about 1.5%. So listen, we watch that chip sector because chips go into everything. Not all chips are the same, but nonetheless, and that's after, I should say, a big beat for both the fourth quarter on the top and bottom lines, $1.80 for EPS versus $1.33 the estimate. Fourth quarter revenue, 4.08 billion versus an estimate of 3.6. Man, that is a big beat.
Yeah, free cash flow for the year for Texas Instruments, $5.5 billion, 38% of revenue. I'm still keeping an eye on Microsoft, Carol, because it's continuing to tick higher here. Microsoft shares and after hours trading above 4%.
Yeah, and listen, this is going to shape certainly the trade tomorrow, and this is what we're going to also want to hear on those calls for both of these companies, what they're seeing in terms of the outlook and visibility for 2021. Let's bring in Bloomberg News cross-asset reporter Sarah Ponzak. We talked with her earlier, kicked off our broadcast with her story, which is, I think, the most read or among the most read on the Bloomberg today. Nice job. Well done. What's interesting, I mean, we're focusing on the earnings, which I think we need to be, but what's catching your attention here?
Right. Let's bring us back to earth here. Get away from GameStop. Get away from penny stocks and look at Microsoft for a second. You just read the numbers. Beats across the board. As Tim said, we continue to see this stock trade higher. Now it just punched up above 5% at a time. If this holds, of course, granted it's very early. We have to wait to see what management has to say. We can see some moves here and there, upwards and downwards after these earnings releases come out and quick jolts. But I just did some quick rewinding, and if these gains hold, it would be the strongest post-earnings reaction since Q1 of 2019. So about 2 years or so. So that gives us a sense of how strong this post-earnings pop really is. And it just continues. It seems to be holding.
Yeah, Sarah, I mean, look, the big question, when you see a beat like this on Microsoft, coming ahead of other companies that are planning to report earnings this week, of course, Apple, Tesla, Facebook, Samsung, what does it mean for the way that investors are going to be thinking about the way these companies need to show?
Right. Well, it affects sentiment, certainly. We saw Microsoft coming into today's report close at a record high today. And over the past couple of months, we have seen the FANG stocks actually lag. We have seen this rotation take hold where cyclical companies, value companies have been leading the way higher. And it had been a while, actually, since many of these big mega cap tech stocks had actually reclaimed their record highs since the correction that we saw back in September. Well, today we did see Microsoft close at a record high. Microsoft is the second of, I guess it's not technically included in FANG because there's no M there, but add it to the group. And the second of the group to report earnings, Netflix reported earnings last week and really hit it out of the ballpark. We saw Netflix shares surge in the aftermath after we saw greater subscriber growth than expected. So you see these big, well-developed companies just continue to perform quarter after quarter. And the question is now, like you mentioned, we'll hear from Apple tomorrow.
Right.
We'll be hearing from Facebook soon, also Tesla, which is in a little bit of a different boat.
Yeah.
But
I mean,
these companies that have seen amazing growth, can they keep it up?
Yeah, absolutely. And we're all focused on that. We're also focused on Starbucks earnings. That stock's down. It's bouncing around, but right now down about 1.25%, almost 2% in the after hours. I think this is what's catching people's attention. First quarter comp sales down 5%. The estimate was for a decline of 4.2%. So that is maybe what's worrying investors at this point.
Yeah, the company is saying that it still sees fiscal year adjusted earnings per share $2.70 to $2.90. Estimates were at $2.84, so in line with estimates there.
Yeah, exactly. Stock was up about 22% last year, down about 2% so far this year. So just watching that. Sarah, thank you so much. Really appreciate it. You are listening to Bloomberg Radio.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson, what is your stock of the day?
Carparts.com, Tim.
Carparts.com.
Yeah, you know what it is. I mean, just from the name, Carparts.com was founded in 1995 and went public in 2007. The ticker is PRTS. The shares were sold at $10 each in the initial public offering and have slumped over the years. They fell below $1 in 2018 and 2019 and almost did so again last year. Now, Carparts.com said its 2020 low in March, and since then, the shares have soared. They rose back above the IPO price in July, and after 6 months of trading in a range, they surged to a record today. Here's why. Carparts.com unveiled a sales hub for hybrid, plug-in hybrid, and electric vehicles. The hub says more than 129,000 parts and 700,000 applications are available. Parts can even be bought for Teslas. Oh, and a couple of dozen other brands.
You own a Tesla, you're not fixing your own Tesla. I'm just saying.
Yeah, maybe so, but somebody's got to get the parts from somewhere.
True.
Having it online is great. The introduction sent Carparts.com shares to a record, as I mentioned. And then to their biggest ever gain, they jumped more than 48%. 1%.
Don't they just fix themselves? Isn't it like
I like the name of this
Tony
company.
Spark? You know, they just kind of fix themselves. All right, Dave Wilson, thank you so much. You have a good night.
Thank you. You too. I'll see you tomorrow.
I'll see you tomorrow for Fed Day. All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the U.S. Senate has begun the process of impeaching Donald Trump, convening a trial court, then agreeing to delay the actual trial by 2 weeks to do other business like confirm cabinet members. Bloomberg's Irv Chapman has more from Washington.
The oath as jurors was administered by the presiding senator, Patrick Leahy.
So help you God.
Senator Rand Paul moved to declare the trial of a former office holder unconstitutional.
This proceeding, which would try a private citizen, violates the Constitution and is not in order.
Majority Leader Chuck Schumer.
The theory that the Senate can't try former officials would amount to a constitutional get-out-of-jail-free card for any president who commits an impeachable offense. It is clearly and certainly constitutional to hold a trial for a former official.
The Senate voted by 55 to 45 to go ahead with the trial. In Washington, Irv Chapman, Bloomberg Radio.
White House Press Secretary Jen Psaki says President Biden has had his first phone call with Russian President Vladimir Putin.
He called President Putin this afternoon with the intention of discussing our willingness to extend New START for 5 years.
She says they also discussed the cyber attack on U.S. companies and government agencies. There were fewer air travelers in the U.S. last year, but a higher percentage of them were carrying guns. The Transportation Security Administration says screeners found nearly 3,300 firearms on passengers or in their carry-on bags in 2020. That's about 83% of the guns were loaded. Global news, 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. Carol Masser, and joining me right now is Charlie Pella. And man, Charlie, check out shares of Beyond Meat today. Stock was up almost 40% at its highs, still finished with a gain, not as much, but still up about 18% on the day.
Indeed. And
Well,
year to date, the stock is up by 49.46%. And yes, I get that we're only in the middle or near the end of January, so should I be talking about year to date numbers? But what a spectacular run.
Well, yeah, when it's like that.
Absolutely. But I'll tell you why this deal is so significant, this deal with PepsiCo, because PepsiCo controls a lot of the space. It's growing inside grocery stores. PepsiCo is also the maker of Quaker Oats, Doritos, Gatorade.
This is Bloomberg Radio on Alexa.
And also, too, as we tell you all about it on Bloomberg Radio, they will be bringing their marketing, brand building, and distribution weight to the partnership. So
it's a joint venture between the two. And that's why, right? Like, that's why all of a sudden all the investors are like, okay, this opens up a lot of avenues for Beyond Meat.
Exactly. And you know what's funny though, in terms of the year-to-date numbers, I mean, so far this year, the S&P has returned 2.5%. PepsiCo shares, they are down this year by 4.4%. So a little bit of an interesting disparity in the way that the two stocks are behaving there.
But listen, it's all about these partnerships for these, protein-based alternative, whether it's meat, whether it's shrimp, whether it's pork, whether it's what have you. But we're seeing these partnerships, whether it's Pizza Hut, Dunkin'. Earlier this month, Taco Bell said it will begin testing a Beyond Meat menu item in the United States. It also collaborated with McDonald's to create plant-based patties for the fast food. I mean, this is just about getting this product. It's really about business to business, right? Getting it out to as many avenues as they can. And that's where you start to see the growth on the top and bottom lines.
Indeed, as you say, right at the start, and as you just mentioned here, key because they've teamed up with some unbelievably big names, PepsiCo the latest.
Yeah, pretty impressive. And as we said, Beyond Meat, it was up about 65% last year. Charlie broke down the year-to-date numbers, and it's already up 50% so far in 2021. So already on our stocks to watch in this new year. Charlie, thank you so much. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft shares surging after hours. Fiscal second quarter sales up 17%, a faster clip than analysts projected, thanks to buoyant demand for corporate cloud, computing services, and software tools that support at-home workers. Shares surging again, Microsoft up now by roughly 6%. Second quarter revenue, $43.08 billion, estimates $40.2 billion. Texas Instruments also out after the bell. It did report revenue for the fourth quarter that beat the average analyst estimate. We had shares of Texas Instruments down right now by roughly 1%. AMD's first quarter revenue forecast beat estimates. Shares of AMD up by roughly 2%. Also reporting after the closing bell, Starbucks, little change, down 0.2%. Starbucks rebound in China continues to gain traction, even as its key home market and other international segments lag. It turned out to be a down day on Wall Street. Late session fade, closing close to session lows today. Stocks slipped ahead of those earnings reports. S&P edged lower after struggling to gain traction throughout the day, weighed down by worries over new coronavirus variants and hurdles to a fresh aid package. Small caps among the worst performers today. Traders turned away from bets on an end to COVID lockdowns. Russell 2000 down today by 0.6%. S&P 500 index down 5. That was a drop of 0.1%. The Dow down 22, lower by about 0.1%. Nasdaq lower by 9, a drop of 0.1%. Among today's stock standouts, shares today of Pitney Bowes, PBI on the ticker, surging 81%. GameStop heavily shorted, up today by 92.71%. 10-year yield 1.03%. Gold down 0.2%, $18.51 the ounce. And West Texas Intermediate crude lower by 0.4%, $52.55 a barrel. So again, recapping here, the Dow, the S&P, Nasdaq all lower. S&P down 5, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. Well, the Atlanta-based money manager Invesco, they reported earnings today, topping Wall Street expectations. They operate in 25 countries, roughly $1.3 trillion in assets under management. So we are delighted to welcome Invesco President and CEO Marty Flanagan in another edition of Bloomberg Business Week Talks, to be featured in an upcoming issue of Bloomberg Business Week magazine. Marty, nice to have you here. How are you?
Well, thanks to have me, and doing great, and happy 2021 to you and all your listeners and watchers.
Well, good to have you here, and fingers crossed that 2021 is not like 2020. How do you see it, and do you think it's going to be another difficult market year?
Look, you bring up a good point. 2020 was, something that none of us have ever imagined living. And I will say a lot of the work that was done in 2020 sets up a very interesting environment going into 2021. I think everybody's looking for strong economic growth in the United States in particular, and most countries around the world, driven by the optimism and the ability to start to get back to work with the vaccine coming, and all of us, frankly, learning how to work in different ways.
Yeah, absolutely. Well, what's interesting is our Peter Coy, Bloomberg economics editor, Bloomberg Business Week economics editor, he's got a story out there about whether or not we're setting up to be like the roaring 1920s, what we saw after another time period in our history where we had a pandemic, we had a tough economy, and whether or not we come roaring back. How do you see it? Do you think that we might be creating bubbles right now and that we're going to pay the piper at some point? Or do you see us setting up for maybe a really positive type of market environment, some economic momentum that feels much more normal and maybe even upbeat?
Yeah, so lots of good thoughts there. But let's go to the more immediate outlook. I mean, I think you could really have, as your economist was saying, a really strong economy, right? With all the fiscal stimulus that's been put in there, with all the monetary policy changes that have been put in, monetary support. But frankly, all businesses really put the head down and did everything they can to be operating more efficiently, really as a protection last year. When you look into this year, you could see some real earnings surprises. We're going to need that because of some of the valuations. But, the momentum that we're seeing in our business is as strong as it's been in 2.5 years. So I do think that is part of the optimism that's coming out of it, and really people seeking greater returns, as with yields being so low and so much of the markets.
So Marty, what's been the impact on your business and running a money management business in 2020? What has been kind of the lasting impact here?
Yeah, so I would, to put it in perspective, I would say it was harder for money managers. I will say specifically than the financial crisis, just because of the steepness of that and so quickly the market pullback. And whoever would imagine having 99% of your global workforce working from home? Right. We did, and everybody else did. But how we're interacting with clients around the world is forever changed. We can bring the whole organization to our clients in a moment's notice. Now, we could have done it before; it just wasn't the cultural thing to do. We will end up seeing clients in person going forward, but these digital engagements have just really changed the game. I think that's a really positive thing. And I will say the other thing: our industry has been, as going under tremendous change, and that was happening before the crisis, but the big are going to get bigger, and they're only going to get stronger, and it's going to happen faster post this pandemic.
Well, and it's interesting. We've seen a fair amount of consolidation, too, in your industry. What's your expectation? Do you think that there'll be further consolidation within the asset management and money management industry this year?
I do. Look, I've been saying that for a period of time, but I will say, yes, ever since I've got in the industry, there's calls for consolidation. Very little happened. It's very different, though, now. Clients are working fewer money managers, and that's happening around the world. There's a greater expectation what clients want from money managers. That's ultimately a very good thing for clients and consumers, but it's putting a lot of pressure on money managers, and that is really where you absolutely need scale within your business at multiple levels. And that's how you're going to serve your clients. They want depth and breadth and capabilities beyond just managing money. So I think you're going to continue to see combinations. But the other thing, the growth, it's not all going to be through M&A. I mean, there will be just firms that are disadvantaged will leave and they'll go to the stronger firms.
All right, sit tight for a second, Marty. We're going to do a little bit of a news break, and then we'll come back and continue the conversation. We're going to get back to Invesco President and CEO Marty Flanagan. This is going to be featured in an upcoming edition of Bloomberg Business Week magazine, and we'll continue talking about some of the changes that we're seeing within the industry and maybe some of the other issues in terms of where growth is coming from. We know Invesco is certainly focusing on China when it comes to growth, so we'll talk a little bit more about that when we come back. Just a reminder of how we closed on this Tuesday. Dow Jones Industrial Average off about 23 points, S&P 500 a decline of 6 points, and the NASDAQ with a decline of just about 10 points, near our worst levels of the session. Starbucks, Microsoft out with earnings, so is Texas Instruments, and those stocks certainly on the move in the after hours. You're listening to Bloomberg Business Week. We'll come back with Marty Flanagan over at Invesco in just a minute.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week. Just crossing the Bloomberg U.S. to order 100 million more doses of both the Pfizer and Moderna vaccines and boosting their vaccine supply to 10 million doses per week from 8.6 million and boosting shipments for the next 3 weeks. These new vaccines are expected also, I should point out, over the course of the summer. This is coming from an official from the Biden administration. All right, let's get back to your top business headlines. Hey, Charlie Pellet.
Well, hello there. And shares of both companies are responding. Moderna are up now by 4%. Pfizer up 0.4%. Lots of earnings after the bell. That's why you keep it locked in to Bloomberg all the time, especially during earnings season. Microsoft says fiscal second quarter sales up 17%. Faster clip than analysts were projecting. Microsoft after hours up by roughly 6%. TI, Texas Instruments, delivering a bullish forecast for the current quarter, signaling that demand is rebounding for semiconductors in vehicles, personal electronics, and industrial use, but shares trading lower after hours, down by about 1%. AMD also out after hours, up 1%, sees first quarter revenue about $3.1 billion to $3.3 billion, estimates $2.73 billion. Starbucks after earnings down 1.5%. China sales rose, countering weakness in the U.S. Stocks ended an up and down session lower, with the S&P falling 5, retreating from a record, down by about 0.1%. NASDAQ down 9, a drop of 0.1%. The Dow down 22, a drop of 0.1%. 10-year down 1/32, 10-year yield 1.03%. Gold down 0.3%, 18.50 an ounce. West Texas Intermediate crude down 0.1%, 52.72 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, let's get back to Invesco President and CEO Marty Flanagan. Marty, thanks for staying with us. You know, we were just talking about consolidation. Nelson Peltz is on your board. His Tryon Fund Management has a nearly 10% holding in the company, I think the third largest in Invesco. What's the end game? I mean, we were just talking about consolidation. What are you hearing from him, or what do you expect in terms of how this relationship might impact the company?
Yeah, so Nelson joined the board, as did Ed Garden, his partner, and Tom Fink, who was the CEO of Barings at the end of last year. As you know, all three really talented people. They know the sector extremely well. And Nelson and Ed and Tom, consistent with our board, view the industry in a very same way. That it can just be a large, growing industry, but it's going through dramatic change, and that this sort of movement to stronger and stronger, larger and more capable firms is really top of mind with them, and it's just very helpful to have people that have been through all sorts of change and development in other industries too, and bringing that perspective. So it's been early days for all three of them, but it's been great additions to what is already a very strong board. Is it safe to say you have to be bigger to go after the likes of BlackRock and Vanguard? So I look at it a different way, really. It's really to serve our clients, right? And what we're seeing from our clients all around the world is they want everything from passive portfolios to factor portfolios to high conviction active alternatives, and they want a bunch of analytical tools and support to help them do their job. And you really have to have scale to do that. And so not just investment skills, but also the operational skills and the ability to invest in things like technology to serve clients. And if you do that very well, you're going to continue to grow. Hey, listen, you just said, you talk about all the options that your clients want, and that's really what you guys stay focused on, what your clients want, what investors want. But I do wonder too, we've had so many conversations here at Bloomberg about, actively managed ETFs. What do you think is the future of that? So we just launched 4 non-transparent ETFs in December. Mm-hmm. It's actually very interesting. So obviously the ETF growth has been, just spectacular. It's largely been in cap-weighted indexes, as you know, but where we have been very successful is in the factor area. So it creates another alternative where you can have non-transparent ETFs for active management within a different vehicle. There is a preference towards that vehicle. That said, we're really excited with the launches, but I suspect it's going to take some time before you're going to see a lot of momentum in the area. But again, very few money managers have that capability. We're one of them, and we're happy to have it.
Hey, listen, one place that you guys are seeing a lot of momentum in, and you continue to focus on it, Marty, is obviously what you're doing in China. And I know you guys are looking for growth. I think you put this out last year of more than 40% in your China assets in 3 years. How is that going? And I know you've been looking to boost your ownership to, I think, 51% in the joint venture that you have there. How is it going? And are you at all a little nervous about a new administration and what the relationship will be between the U.S. and China?
Yeah. So, right now we manage $76 billion of assets in China for Chinese, whether it be through our joint venture you're referring to or directly with institutions. The growth has been unbelievable. It was a record year again for our China business. In the last half of the year, they had something like $17 billion in net inflows. So it is, an overnight success after 20 plus years, in the marketplace. I think, frankly, the relations between U.S. and China is important. It was definitely creating complications for all of us that were operating there. Not in a material way, but I'd say it was uneasy as you were looking to the future. And I think it's really important for two world powers to, be on the same page. And it's good for each country is good for the world. So I'm hopeful that that's what's going to happen as we look forward here.
Okay. It does feel like a little bit of a new day, safe to say?
Early days, but it sure does. Yes. Yeah.
Well, let me also ask you just some of the things. We just have about a minute and a half left here. Some of the things that we are talking about increasingly, whether it's Bitcoin, whether it's Robinhood, what of kind of some of the newer trends that are out there that you find interesting and that you think investors overall, folks in the financial community, in the investment management world need to pay attention to right now?
Yeah, so it's a good question. It all depends on who you are, right? But I think the reality still gets back to basics. Truly understand what you're trying to accomplish, what returns you're trying to get, what risks you're willing to take, and the basic of time horizons. Developments such as Bitcoin and the like, I think it's still early days. It's obviously very, very topical. You're seeing a lot of energy behind it right now. I'd say it's not for everybody, and my basic view is that. Very interesting, but you're going to see central banks in the game, at some point too, and I think that puts the value of it at risk, quite frankly. So is that 2 years out, 3 years out? I don't know.
Yeah. Hey, one last thing. SPACs is another thing that they're just kind of exploding. Does it make you at least a little bit nervous in terms of what that might mean for the investment world? Does that look like a bubble to you? And just got about 30 seconds here.
Yeah, so anytime something grows that fast and it's so wonderful, it's probably good to question, how long it's going to last. So I would warn the bubble camp, quite frankly. So.
All right, we're going to leave it on that note. Marty, thank you so much, and I appreciate it. I know we had some technical difficulties to kick it off, so thank you so much for your patience. Really appreciate it. Invesco President and CEO Marty Flanagan. Check out, we're going to feature that interview over the weeks to come, but also in an upcoming issue of Bloomberg Business Week magazine. All right, you're listening to Bloomberg Business Week. I'm Carol Masser, and let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden says the nation needs to change its approach and put racial equity at the center of all we do.
I firmly believe the nation is ready to change, but government has to change as well. We need to make equity and justice part of what we do every day, today, tomorrow, and every day.
Among the executive orders he signed today is one that would eliminate private prisons, saying it's time to stop profiteering off incarceration. He also wants to free up more capital to minorities to buy homes. Well, Biden is also holding a briefing this afternoon on the coronavirus, and he's expected to announce the U.S. should be able to send enough vaccine to states this summer for 300 million Americans. At least one leading drug maker is bullish on ramping up COVID vaccine production. We get more on that from Bloomberg's Karen Chase.
Pfizer says it's already producing vaccine at warp speed, delivering 120 million doses to the U.S. in the first quarter, 20 million more than it promised. And the second quarter is also on a fast track.
We were planning to provide them all the way to 200 million doses by the end of the second quarter, actually beginning of the third. Right now, we will be able to provide the 200 million doses 2 months earlier.
Pfizer Chief Executive Officer Albert Bourla says Pfizer and BioNTech are planning to produce a total of 2 billion doses this year, 50% more than it expected. Karen Chase, Bloomberg Radio.
The Golden Globes will bestow the Cecil B. DeMille Award to Jane Fonda during the 78th annual award ceremony next month. The Hollywood Foreign Press Association is honoring the 83-year-old actress for her off-screen activism in addition to her on-screen work. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So, Charlie Pellet, what goes up 17, 18% in a day, then down 2% in a day, is known for its macrame wall hangings and chunky knit throw blankets?
I know the answer to that one. It's Etsy. And
it is Etsy.
And it's absolutely fascinating because it reminds me almost of getting a mention on Oprah because today shares jumped and then pulled back.
You get a car, you get a car, you get a car.
Yeah, just imagine if Elon Musk started saying that. But tell me a little bit about what happened today, because why did the stock pop and then why did it retreat?
All right, well, Elon Musk, he said, hey, I kind of love Etsy. And he put that out in a tweet. And then in a follow-up post, he explained that he had bought a hand-knit wool Marvin the Martian helm for his dog and posted a picture of it. And so, listen, I follow Elon Musk on Twitter pretty faithfully. Got a whole column on TweetDeck just devoted to it. And he shows the picture, and it was for his dog. It's like a little
Marvin the Martian. Now, that's not a name that I know, but, if I was an AM disc jockey back in the 60s, Marvin the Martian might not be a bad name. But listen, it's like this little green, almost like a football helmet in a way, with like a yellow post, and it looks like a radar detector up on top of that. It's an interesting attire for a dog, and I guarantee you the dog's going to love it. Sure.
I think, yes, totally. But it's such kind of endemic of what we're going through, whether it's GameStop or some other companies. We saw it with Hertz last year, where all of a sudden a stock out of the blue that nobody's been talking about, all of a sudden it's just off the charts. Even we saw it with Pitney Bowes today.
Exactly. That stock just absolutely surged today. Pitney Bowes up 81.01% today. When's the last time we talked about Pitney Bowes? That stock, by the way, for the year up 121%. You think that's a lot? GameStop up 685%.
Yeah, exactly. Well, Elon Musk, we'll call that the Musk effect. And Etsy's going to be like, thank you, I think.
Yep. And just want to mention Etsy based in Brooklyn.
It is indeed. Oh, yeah, your hometown. All right, good stuff. Charlie, thank you so much. This, by the way, I think among one of our most read stories on the Bloomberg today. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating an earlier headline from the Bloomberg Professional Service. U.S. government's ordering up 100 million more doses of both Pfizer and Moderna vaccines. Microsoft, after earnings, shares up more than 5%, said fiscal second quarter sales were up 17%, a faster clip than analysts projected. Texas Instruments delivered a bullish forecast for the current quarter, signaling that demand is rebounding for semiconductors, for vehicles, personal electronics, and industrial use. Shares lower now by 1.1%. AMD out with an upbeat forecast. Shares down by 2%. Starbucks, after earnings, down 1.6%. China sales rose, countering weakness in the U.S. Another wild day for GameStop, up 92.7% today. Stocks move lower late in the day. Late session fade with the S&P down 5, a drop of 0.1%. The Dow down 23, down 0.1. NASDAQ down 9, down 0.1%. 10-year yield 1.03%. Gold down 0.3 at $18.50 the ounce. And West Texas Intermediate crude 52.75 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So as we mentioned earlier, Pfizer will be able to supply the U.S. with about 200 million COVID-19 vaccine doses by the end of May. That's 2 months sooner than previously expected. That's according to its top executive, Chief Executive Alberto Bourla. He talked today, earlier, at the Bloomberg Year Ahead Virtual Summit. Here's a little bit of what he had to say. Check it out.
In the U.S., we had promised to provide 100 million doses by the end of the first quarter, and we will be able to provide 120 right now. The same is with the second quarter. We were planning to provide them all the way to 200 million doses by the end of the second quarter, actually beginning of the third. Right now, we will be able to provide the 200 million doses 2 months earlier.
All right, and that was Pfizer CEO Albert Bourla speaking with Bloomberg's editor-in-chief John Micklethwaite earlier at the Bloomberg Year Ahead Summit. Let's just quickly bring in our Riley Griffin as we await President Biden expected to give an update, I should say, on the virus. Riley is U.S. healthcare reporter at Bloomberg News. So, Riley, we also got some headlines from the Biden administration that seems pretty important, and it has to do specifically with the number of vaccine doses that are out there.
Absolutely. Well, you heard Albert Bourla mention the 200 million COVID-19 vaccine doses that are already agreed to supply the U.S. for before the end of May. Well, now we're learning that the Biden administration has said it intends to order 100 million more doses of each of the Pfizer and Moderna Inc. coronavirus vaccines, and at least temporarily speed up shipments to states to about 10 million doses a week. This is an important development that comes amid heightened anxiety over the sluggish pace of the vaccine rollout and concern over a limited supply of doses. And I will note, remember, both with Pfizer and Moderna, these are 2-dose vaccines.
Right. Riley, I have to cut you off because the president is giving an update. Let's take you to President Biden.
The briefings that occur on a regular basis with Mr. Zients and his team. So we're bringing back the pros to talk about COVID in an unvarnished way. Any questions you have, that's how we'll handle them, because we're letting science speak again. And so I'd like to update you on the aggressive steps we're taking to meet our goal of administering 100 million COVID-19 vaccine shots within 100 days, and to ramp up the vaccine supply as fast as we can. This will be one of the most difficult operational challenges we've ever undertaken as a nation. I've said that before, but I must say it again, because we're going to do everything we can to get it done. But a lot of things can go wrong along the way. And so, as I've said in the past, we want to give credit to everyone involved in this vaccine effort, and the prior administration, and the science community, and the medical sphere for getting the program. I didn't do it, I promise. For getting the program off the ground. And that credit is absolutely due. But it's also no secret that we have recently discovered in the final days of the transition, and it wasn't until the final days we got the kind of cooperation we needed, that once we arrived, the vaccine program is in worse shape than we anticipated or expected. A lot of you follow this, and nobody is, I mean this sincerely, the press is the smartest group of people in town. You hone this stuff down clearly, I think you found the same thing. Even before I took office, I announced a new vaccination strategy, which centers on federal leadership and execution for our whole country. And that's why I directed my COVID team to go to work immediately on how we could step up the vaccination efforts and the vaccinations. I'm pleased to announce the first progress in that work today and on day 7 of my presidency. First, after review of the current vaccine supply and manufacturing plans, I can announce that we will increase overall weekly vaccination distributions to states, tribes, and territories from 8.6 million doses to a minimum of 10 million doses. Starting next week, that's an increase of 1.4 million doses per week. And you all know, if I may note parenthetically, you all know that the vaccines are distributed to states based on population. They're based on population. And so the smaller the state, the less vaccine, the bigger the state, the more they get. And so this is going to allow millions of more Americans to get vaccinated sooner than previously anticipated. We got a long way to go, though. The second thing, we're increasing the transparency with states, cities, and tribes and local partners when it comes to the vaccine supply. This is something we've heard over and over again from both Democrats and Republicans, state and local leaders, that they need a plan in order to they need to know what they have to plan on. They need to know what the order is going to be. Jeff had a meeting with the governors on Zoom and others, and I think we're getting this coordinated in a way that there's increased cooperation and confidence. But until now, we've had to guess how much vaccine to expect for the next week, and that's what the governors had to do. How much am I getting next week? This is unacceptable. The lives are at stake here. From this week forward, God willing, we'll ensure that states, tribes, and territories will now always have a reliable 3-week forecast and what the supply they're going to get. So they'll know 3 weeks ahead of time what's going to be there in the 3rd week. This is going to help make sure governors, mayors, and local leaders have greater certainty around supply so they can carry out their plans to vaccinate as many people as possible. So we will both increase the supply in the short term by more than 15% and give our states and local partners more certainty about when the deliveries will arrive. These 2 steps are going to help increase our prospects of hitting or exceeding, God willing, the ambitious goal of 100 million shots in 100 days. But I also want to be clear, 100 million shots in 100 days is not the end point. It's just the start. We're not stopping there. The end goal is to beat COVID-19. And the way we do that is to get more people vaccinated, which means we have to be